fundsupermart.com.
How long have you been managing the Aberdeen European Opportunities Fund, and what do you think was the biggest challenge you faced during this time?
Well, the Aberdeen European Opportunities Fund has been around for a long, long time. I've actually been head of the European team since 2009. And one of the biggest challenges I've faced during that time has been to improve the performance over the last couple of years and to make sure that the Aberdeen European Opportunities Fund follows the Aberdeen investment process, which I believe it now does. Obviously, one of the biggest challenges has been to manage the fund during a time of difficult crisis within the European Union. But of course, as we'll probably talk later, it's all about the companies that we invest in. And that has been the greatest satisfaction of managing the fund, has been investing in good quality companies.
How many members are there in the investment team, and where is the team based?
There are 17 investment managers in the team, and we are split, actually. We have some members in Edinburgh, Scotland, we have some members in London, in the UK, and we have 2 members in the Paris office as well.
How does the team generate investment ideas?
Well, we've been doing this for a long time. So we have, over the number of years, seen just about all the companies across Europe. We see 750 companies every year. So the investment ideas have been coming about for quite a while. So when we're analysing a particular company, we will look at the competitive position of that company. So we will look at other companies that are competing against them as well. And then when we do our country trips, we'll be looking at different companies within the different countries across Asia. So we'll also come across new ideas when we're looking at trade magazines, when we're doing our due diligence. So generally the ideas are there. It's then the difficulty is finding the best ideas and investing in those good quality companies.
It's stated that the fund uses the FTSE World Europe Index as its benchmark. How much consideration is given to this benchmark when selecting fund holdings?
Well, we're very much bottom-up stock selectors, and we construct the portfolio of the companies, and so we pay very little regard to benchmarks. Benchmarks, as far as we're concerned, tell you exactly how large the companies are, and they tell you how they've got to that stage. They tell you very little about the future prospects of the company, and that's our job, to find out about those future prospects. So yes, we're aware of the benchmark, but we pay scant attention to constructing a portfolio starting from the benchmark. As I say, we're very much bottom-up stock selecting type of investors.
So will there be any market capitalization, sector or individual stock weighting considerations when constructing the fund's portfolio?
No, we're very, very unconstrained. We invest in small companies, we invest in large companies. If we don't like any companies in a particular sector, we have no need to invest in that sector. So yes, we are very unconstrained, as I say. Having said that, we wouldn't have 100% of the portfolio in a particular sector, so we have common sense limits, but as I say, they are very wide limits. Effectively, we have enough rope to hang ourselves if our performance is going to be very bad, but we like to be very unconstrained.
Can you briefly describe the sell discipline employed by the fund on both the upside as well as the downside?
Well, it's one of the most difficult things for a fund manager is the sell discipline. I'm very fortunate, I think, having been around for quite a long time, having understood how difficult the sell discipline is. A perfect scenario would be a stock that we invested in for a long time suddenly performs extremely well, and perhaps an offer comes in and a bit of M&A activity, and we sell out of that company at a very high inflated price. But typically it's more a case of recognizing that the valuation of the company is perhaps a little bit higher than it should, and reducing that position in the portfolio. So it can take time. The most difficult sell discipline is when something is going wrong. And that is something that we have worked on very hard over the fund recently, recognizing that we shouldn't worry about the fact that we might have lost some money in a stock. What we should do is manage the portfolio over a 5-year period looking ahead, and that's a crucial discipline for us.
Lastly, what is the maximum cash level the fund can hold?
Well, we use cash as a residual position. We don't look at markets and say we're worried that markets might go down and therefore we'll raise some cash in the portfolio. So we are fully invested at all times. But if new money comes into the portfolio and the cash level increases, we'll have a maximum level of, say, 5%, and then we will do a pro rata and invest in those companies that we own.